Huh. Well, you know, we were talking yesterday because we were talking the other day, and we were talking about Banque, and you were examining the methodology, and you were saying, yes, I get it, economics, it works. But in the case of a boycott like Coca-Cola, I understand what you're saying is right, but I need more. I need more. I need to know why. I need to know why this company is bad. I need to know more. And why? Why do you need to know more? The timeline is set. The clock is ticking. Corporations are guilty. They thrive and live on money. We have the ability to cut them off from their money. What more do you need? What more discussion is there? I'll say this in wrapping this up, is that the biggest risk right now is that this ability to boycott a company is actually, it's being assaulted itself from two directions. Number one, there are now laws on the books, or about to be on the books, that are criminalizing boycotts as being anti-business and pro-terrorist. This has already been tested in the animal rights groups in the UK, who have been come under scrutiny from the law in terms of what are acceptable campaigns that can be created. And in the fine print of these laws, which make it a crime to assemble in certain size groups, etc., is language that would imply that even a boycott itself is becoming criminalized, which means it's becoming a crime if you decide to not consume yourself to death. It's like, I mean, that's really the language that they're going for, and it's quite obvious that the corporate occupation treats everyone like a duck on a foie gras farm, where they just got this tube shoved down our throats, and they're just ramming stuff down there. And if you try to stop it, you are a terrorist. And this is the direction that they're going with this. So that could put the kibosh on boycotts. Number two, Coca-Cola is a publicly listed company, and it has a stock price that's sensitive to what's happening in the public domain. Well, what's happened right now with interest rates as low as they are, you see an extraordinary explosion in private equity deals or leverage buyouts, taking all of these companies private. Once the company goes private, the whole boycott thing kind of goes out the window. They get less transparent, there's less knowledge about what's going on, there's more crooked stuff going on. And the size of these leverage buyouts and private equity deals is quite large. They're getting bigger. Coca-Cola is a $120 billion company. It's not inconceivable that a Coke could be taken over in a private equity deal. This again is bad for those who look to boycotts as a possible way to fight back, because once the company becomes private, it's very, very difficult to work out how this could affect the balance sheet of the company. A company, for example, who's in the business of candy, the Mars Candy Company, they ran a Super Bowl ad which was promoting violence against gays. And the gay population was talking about boycotting Mars Candy, but they're a private company. You know, it's a private company, and you can't then get hedge funds to work with you to go sell short the company, attack the company. So I would say the window of tying a boycott to a short sale, tying activists to hedge funds, is something that won't be around much longer, 2 or 3 years maybe. That's it. So I think it's the most effective way to realign markets so that stock prices reflect everyone's issues, all stakeholders, all community members, not just the very, very small minority of those who are manipulating the price at the top, and the currency manipulators and the banking manipulators. And this is a great use of that huge diaspora of activists out there, 15,000 NGOs. They've got combined operating budgets of almost $1 trillion. They've got millions of people working for them. To use that as a single force to impact a company in a way that changes the dynamic in the marketplace of risk and reward. Suddenly this company has more risk than it did before the activists started to organize themselves in this way. It would be a watershed moment in the history of activism and capitalism. And the hedge funds are already making the moves. They're already making the changes. When we started 5 years ago, there wasn't a single hedge fund looking to sell short bad companies. Now there are over 6. So that means there's over $600 million out there looking for bad companies to sell short. Now all we need are the Greenpeaces and the Friends of the Earth and Amnesty International and all the big NGOs to say, if you've got $600 million to sell short a bad company, then we're going to focus on boycotting this one particular bad company to start to take the revenues down. And you bring the symbiotic relationship together, and now you've got a completely new way to look at how markets work.